Good afternoon, everyone. Welcome and thank you for joining us today. I'm Cheryl Gandy, Marketing Coordinator with OmniVue. OmniVue is hosting today's webinar, which will actually be presented by our sales tax experts, Avalara. They'll be introducing 8 ways that you may inadvertently be increasing your company's audit risk. Just a few logistics before we move on. All callers are on mute, and if you have a question, please go ahead and use your question feature in the control panel. Additionally, at the end of the webinar, we're going to have our contact information for Avalara and OmniVue, so you can reach out to us with questions or as business needs arise. Lastly, we are recording this session, and we'll be sending the recorded version to you in the next day or two. So let me go ahead and give you a brief introduction to OmniVue. We are a Microsoft Gold partner. We've been in business for over 13 years, helping companies thrive within the Dynamics, ERP, and CRM suites. We implement software solutions for your company that are actually customized to create new capabilities for you and your teams and ultimately increase your business revenue. At OmniVue, our goal is to help our clients see their world. And in today's webinar, OmniVue's invited Avalara, one of our trusted partners, to help you specifically reduce audit risk by presenting their sales tax tools and solutions that integrate seamlessly into your Dynamics ERP solutions. So let me go ahead and introduce our sales tax experts at Avalara. Avalara is a CFMD trusted partner. This means that they are a certified from Microsoft Dynamics software provider, and they work closely with OmniVue as one of our preferred partners as we help our clients manage complicated and burdensome tax compliance obligations. Mark Rowe is our Avalara guest speaker today, and Mark helps companies and users like yourself reduce audit risk with Avalara tools that integrate again seamlessly into Microsoft Dynamics ERP. Many of our clients have a real need for this expertise, so today we're thrilled to have Avalara here with us. Now I'll turn it over to our most awesome tax experts, and welcome Mark Rowe.
Thanks, Cheryl. I appreciate that introduction. So I definitely look forward to the opportunity to present to you today, and our topic today, like Cheryl mentioned, is 8 ways that you might increase your company's audit risk, and kind of a hint is if you're doing it manually now, there might be some opportunities where you're leaving yourself open. So the agenda today is, what I first want to do is just give a little background, talk a little bit about just sales and use tax as an overview. Then we'll talk about those 8 common compliance missteps. We'll give you ways that you can automate the tax compliance, and then we'll give you our contact information and how we can take your questions offline. All right, so let's go ahead and jump in and get started. So I know you guys all woke up and said, hey, I'm looking forward to talking about sales and use tax. So let's just get some general information out of the way. So a lot of people confuse the difference between sales tax and use tax. So sales tax, you really just think about it as like an intrastate type of transaction. So say, for example, I bought something from a company. I'm in the state of Washington, so I bought something from Seattle and I had it shipped to my house on Bainbridge Island. That would be known as the sales tax. Use tax would be, say I purchased something from a company in Georgia and had it shipped to me. That would be considered use tax if they had nexus. So the main difference is, where that piece of property or where it's being shipped to. So is it within the state and ending in the state, or is it originating outside of the state? So that becomes a factor in a little bit later on when we'll talk a little bit more. Other compliance tasks you have to do right now, think of our country as a mosaic of over 11,000 different taxing jurisdictions. So that goes all the way down to city taxes, local taxes, and those are ever changing. So other things to also consider, not only are there that many jurisdictions, but there are also a lot of different tax laws as you go from state to state and jurisdiction. So different jurisdictions tax things differently. There are tax holidays. So say, for example, like in Florida, I think they just had a tax holiday to bulk up on things for like hurricane supplies, like batteries, maybe plywood to board up your windows. As well as coming up in August, back to school time, there are many states that also provide tax holidays for those types of activities. So, buying your back to school clothes and books and paper, as well as the different geographies of those jurisdictions change, not only with new laws, but also geographically things change based on, even local taxing jurisdictions. Say a highway is going through and they're going to collect a special tax. The important thing to note is accuracy is everything, in that you're responsible to know all these things. Similar to payroll, you're supposed to know them all, and if you don't, you could get in trouble. Or you could have, in the case of payroll, you just have some unhappy clients. So one thing that really comes up here is, just overall, not only do you have to know the rates, rules, and boundaries, but you have to calculate it, report, and do a return and remit that tax. So a lot of it revolves around making sure you have the right nexus. So are you in the states that you should be collecting in? Do you know if you have the proper nexus? Do you have any clients that are exempt? So maybe they're reselling some of your products. Do you have the right documentation to prove that they're tax exempt? As well as product taxability. Are some of the things you're selling exempt, or are there exceptions? Or there are different taxing rules based on which jurisdiction you go to. The other thing to note, too, is taxing jurisdictions and zip codes don't equal each other. And what I mean by that is, if you look at a map, my next door neighbor could be in a different taxing jurisdiction because of maybe a local tax, or for some kind of highway project or transit authority. So things can be as close as my next door neighbor should pay a different sales tax than myself. So don't think that a blanket zip code is all going to have the same jurisdiction. I'll talk a little bit later about how, geocoding can definitely help benefit you in that respect. And overall, so now that you've understand, hey, I'm manually, and these are all the responsibilities, what is the state of the states right now? Well, we're just coming out of a Great Recession, and from last year, 2013, 31 states had budget deficits totaling over $55 billion. Therefore, rather than, most state legislatures are saying, rather than raising taxes, we're going to go after, stuff that we're not collecting properly right now. So what they're doing is they're going out and hiring more auditors and looking for ways to recoup more of that money, because a large chunk of their revenue comes from sales tax to help meet their budget gaps. And unlike the federal government, they can't just run a deficit. They have to be a balanced budget. And a few examples, just last year, California announced hiring 100 auditors over the next 3 years. Also, as well, last year, Idaho hired almost 50 new auditors as temporary, and they were able to recover so much money they became full-time staff. So this is becoming real, in that they're seeing the benefit of adding, further auditors to help collect more tax to get into their coffers. With the basic background of, what you need to do to collect your tax, let's talk about some of the common missteps that some companies don't realize could open up to audit risk. Number one, they underestimate the true costs of manual sales tax compliance, or it's cheaper to do things the way we've always been doing them. And that can be true. I mean, a lot of people feel, hey, I already have a staff accountant, my controller or whatnot takes care of that. But there are many hidden costs involved to just doing everything yourself. On average, a research done by Wakefield last summer found that it takes 11 hours per week on average to file and remit your sales taxes. So not only is it taking a lot of time, but there are a lot of issues in terms of, is it being done correctly? As well as the research to find the rates and rules can be complicated, and having to update and maintain your own rate tables can be complex as a company grows, specifically in their nexus. So, if somebody says, hey, it only takes me 5 minutes to get the rate or build a rate table, that's not the case, or at least I know, for example, I tried to do that in trying to just find a proper rate for one specific item to one state. And we had a whole group of people doing it, and none of them got it right, even though we had all the access to internet, to calling the Department of Revenue, and even looking at the Department of Revenue website, if you could find the information, is very difficult, and we all got it wrong. Misstep number two would be address sales tax compliance relatively reactively rather than proactively, or we'll worry about that later. So despite their best efforts to comply with statutory sales and use tax requirements, many companies fail to address risk proactively. So, a lot of times people aren't putting away money, just say, hey, let's stick some money aside and that will be our audit risk defense fund. Assumption that the company's audit risk is nominal, can be addressed at a later date, can be a self-fulfilling prophecy. And a lot of that has to do with, without a documented and provable rationale behind all your calculations and your computations, it can lead to a negative finding, and it can be a major hit on the company's bottom line. So on average, like for example, Wakefield also did a study on this as well, and just to manage an audit, so just having either somebody in your office or managing somebody remotely can cost over $96,000 just to manage the sales tax audit, and that's regardless of if you are found to be owing money or not, just the time to research and get the documents that are required for them. Common misstep number 3, keeping only paper copies of relevant documents, or I keep all my documents in a file cabinet in the back. So documenting processes and keeping track of your certificates and exemptions requires a more comprehensive approach than keeping paper copies in a cabinet. So kind of the example is, would I leave my bank deposits in a cabinet in the back? So those exemptions are money in that you need to treat them like cash, because if you were to be audited and you weren't be able to present a document like a tax exemption, that can hurt big time, because it's not just on that one transaction, but they can go back many years. And having a comprehensive and well-documented sales and use tax compliance process is critical to resolving that. So having a way where I can pull up needed documents like, hey, show me these exemptions for these specific companies, having to pull that up right away versus, I'm not sure how many people have gone through an audit, but a lot of times that can take days to find the information if you're dealing with quite a few of those exemption certificates. Number 4, so fail to register with the correct jurisdictions, or we don't have nexus there, so we don't need to register. So this is kind of a common fallacy for many years, because over time, a lot of people have relied on, kind of some of the former aspects of what created nexus, and I'll talk a little bit more about that. But being able to know, the right conditions to know when people are going to be audited are definitely, hard to reason, and a lot of times states don't come up with those specific formulas. So even if you don't think you're registered, you still might get a response from a state saying, hey, we'd like to audit you. So just, knowing that states, even though you're not registered there, might audit you, and they can go back up to, 4 years in some states, or unregistered for over 7 years, or unlimited look back, if they feel like you have some issues. So state to state, it depends on what areas you could be exposing yourself for audit. The other thing, too, is to make sure is to check in and make sure you know all your filing requirements and the states you're already in. Are you registered properly? Are you filing on the rate schedule? Usually the beginning of the year is always a good time to make sure you will be getting notices letting you know your filing schedule. So it's always good to have a filing calendar on tap to make sure that those are all correct. A classic example is many newly registered taxpayers in Florida are set to file with their returns quarterly. However, if you're doing more than $1,000 of sales tax within a year, you should be filing monthly. So you just want to make sure you're remitting and filing on the right time schedule, and making sure that those tax calendars are always being up to date. All righty, okay, so we're a little over halfway here. So remit sales tax collections improperly. So this is a common misstep, or, you know what, my business is too small to be audited. So as I mentioned a little bit, states are not always clear as to what they're actually looking for and what would make you an audit risk. But statistically, 4 out of 5 businesses will be audited at least once in their life cycle. So the odds are pretty good that that's going to crop up. The last thing you want to do is expose yourself to having people in there looking around and creating a situation where, even though you're probably might be compliant, whether it's small or not, it could be a big headache. And, this is kind of a funny stat. 44% of accounting professionals who've worked for a company that have been audited decided to contest the audit think the process is more stressful than a divorce, and that's from Wakefield from last year. But you can imagine, I've never been through a divorce, but the last thing you want to do is open yourself up to, something that's going to create stress and havoc on your work environment. All right, so number 6, so ignoring exemption certificates and use tax management responsibilities, or I'll take the customer's word for it. So as I'd mentioned a little bit before, if you're just putting things in filing cabinets, that can be an issue. But, certificates are really tricky. One thing you'll find with exemption certificates is that they're one of the hot targets by sales tax auditors. So many people, that's usually the first place they're going to look to find if there's something out of whack with that paperwork. And a lot of times it isn't always do you have it, but it's also, is it valid? Some states like Florida have them expire every year, some every 4 years. Is it the right document based on the use of the exemption? So is it a reseller versus say a nonprofit? So you want to make sure you have it on the right form, it's collected properly, and you have all the proper information and ways to verify that you're collecting it properly. So just don't assume that whatever the customer sends to you is the proper forms. Make sure you have a documented process that you go through to make sure you've done your due diligence to make sure that what they're sending you is valid and correct and filled out properly and not expired. Common compliance misstep number 7, so identifying nexus obligations incorrectly, or we only sell in that state using our e-commerce portal, so we don't have a nexus there. So as I mentioned, just very briefly, a lot of people have kind of gone along with the ruling that the Supreme Court in Quill versus North Dakota back in the early 90s, which was the long-standing, hey, if you have a significant presence there, meaning like a warehouse or some kind of office there, that's where you would need to collect tax. But, with states trying to, fit in and get rid of their budget gaps, they're changing some of their rules that define, what nexus is. So some of the common questions that you probably should start asking yourself, am I creating nexus? Things like, do I have traveling salespeople going into that state? Do I utilize contract labor in the state? Do I have a company representative in the state? So do I have some home offices there? Owning or leasing real property that go across state lines? Do you promote your products or services in the state? So do you have other resellers? Do I go to just even trade shows? So there's a number of things that are changing that are affecting nexus, and that states are really keen to take a look at to see if, hey, if you're doing any of these things, then that creates nexus. So, you definitely need to be careful of what your business practices are exposing yourself towards. All right, and number 8, so ignore the changing sales tax landscape, So state and sales tax laws don't apply to my business. So as I kind of mentioned before, states are really dependent on these tax revenue, and with the current environment, the way it is, they're starved for cash, and the easiest way that they can find that cash is by getting the low-hanging fruit or collecting, improperly submitted sales and use tax dollars. One thing that you might notice on this pie chart is a large majority of state revenue comes from sales taxes. In the state of Washington, it's over 51% of the annual revenue that comes through the state coffers is from sales and use tax. So it's definitely very important in keeping, public services up and going. And with all the budget gaps that are coming up, they need to fill that, and so rather than raising taxes, they're just trying to collect what is out there that was improperly submitted or not collected. So let's go on to, rather than just doing it yourself, what are some of the ways that you can automate the tax compliance? So Avalara has solutions around, taking some of the burden away from doing what we consider to be, a pass-through type activity, meaning the states require you to do the taxes just like payroll, and you're not going to get rewarded with extra revenue by doing it correctly. You're just going to, get a gold star, for doing it correctly. And by being able to reallocate resources in your accounting or finance departments on revenue-generating aspects, which what we're finding is most CEOs are looking to increase top-line revenue by freeing up other hours that are spent on, revenue-neutral activities like sales tax. Solutions like Avalara can definitely help not only reduce your audit risk, but also take care of, burdensome hours that aren't going to get your company extra revenue. So rather than having to do, as we mentioned, like just the basic, what do you need to do to properly collect and remit sales taxes, we have solutions that can help, give you the right rates, rules, and boundaries, and they're all integrated right within your dynamic solutions right now. We also have over 300 different connectors, so if you also have other connectors like e-commerce platform or things like that, we do work and have them pre-built integration so that you can also get tax calls that way as well. We'll provide all the right sourcing rules. So when I mentioned, I talk a little bit later about the geocoding. We do also offer address validation. So kind of a bonus in that, the solution will not only do the calculation of the tax for you right within your dynamic solution, but it will also provide you the proper address, and that will help you determine the taxability jurisdiction because it will rooftop geocode that specific address and validate it. Side benefit too, if you're doing a lot of shipping and you get in any shipping charges because your addresses are improperly formatted, we can help reduce that for you as well. We also provide a roll-up area where you can see all the taxability of each transaction, so you can pull up reports on all that information. And we have actually what we call taxing categories or taxing rules, over 1,800 that are available, that rather than you having to do the research to know if your widget or your product is taxable in one area versus another area, we actually keep up and maintain those rules for you. We do also offer ways to do consumer use tax as well as VAT tax. So if you're in construction or some kind of installation that can turn something into real property, we can help you calculate your use tax as well. Also, when talking about ways that you need to properly maintain your exemption certificates, in terms of that being an audit issue, we do have solutions that can help you not only, capture and create exemption certificates for your customers, but it can also be a storage and reminder to let you know which ones are expiring and to request them. And it's as simple as sending out emails, and they can actually create all those forms right through our portal, or they can upload and send them to you and create a storage area where you can have an easy way to get to them and retrieve them, as well as run reports against them. And, it is an end-to-end solution, meaning we do also offer returns. So rather than having to, take those on average 11 hours to just do the calculation and doing the returns every week, we could also do the end-to-end calculation, remit. So essentially, you'll just approve the dollars that we calculated for you. You'll send the funds to a trust account, and we'll make sure we'll file those on your behalf. And we'll also respond to any inquiries back from the state if you have any in regards to those returns. So we can take you out of the loop and deal with any state questions on your behalf. So in a quick nutshell how it works, so let's take a look. So Avalara is actually a cloud-based solution, and it connects seamlessly with your Dynamics. We already have the pre-built connectors that are Microsoft certified, and so rather than building the tax table yourself or updating that or having to update that, or even if you have rate tables, rather than having to update those on once a month, once you click AvaTax into your Dynamics, it will give you those calculations real time or less than a second. And then we'll also provide the returns. So after we've done all the transactions, you're going to have an area in our admin console, which is a web-based tool, that you can go in and look at your transactions, look at the total amount that's due per state that you have Nexus in, and you can approve those, and we'll file, remit, and make sure that those taxes are paid on time. And if there's any bonuses that you get it in early, we'll make sure that you get those as well. So it's, like I had mentioned, it is end-to-end, so we can definitely take you away from the loop of having to worry about, the compliance of making sure all the tax rates, boundaries, and rules are kept up on. We do all that for you. And then the returns are remitted on time and calculated correctly. So just to wrap up, let's talk about what are some of the ways that you can reduce the audit risk after looking at some of the common missteps right now. So what you should do, so do a Nexus study. So there are definitely companies out there. We do provide these services, but CPAs can do them as well. Make sure you have the right understanding of, do you have Nexus in any other states that you know of right now. Make sure you stay up to date on rate, rules, and boundary changes. Make sure you can report consumers' use tax. There's a good case study we had where there was a coffee shop that was actually providing, they had an auditor in, and they used to provide free coffee to their specific customers or their employees, and they would go in and use a bunch of the inventory cups to get their coffee. Well, the auditor would see a huge pile of cups in the trash can, and they were asking, what is this? And they told them, hey, we provide free coffee to our employees as a perk. Well, they weren't, since they got those cups wholesale, they weren't paying tax on those specific cups, and that opened themselves up to use tax. So make sure if you're taking anything off the floor or if there's any input that is taxable that's becoming real property, make sure you report that use tax. Those are definitely things that are starting to get hit upon by auditors. Be compliant from day one. So if you're a new business, make sure you're doing the right thing from the get-go, because the audit period can follow you from the beginning of time a lot of times. And automate. Find ways to take the burden off of doing everything manually and free up time to get more revenue-generating activity. And lastly, make sure you have understanding of your filing requirements, meaning know when you have to file and at what time frames, monthly, quarterly, yearly. Make sure that your product taxability are covered. So have you done the right research? Are you maintaining the right taxability for which products and items that are across all the jurisdictions that you might be in? Are you keeping good records? Make sure they're detailed so you have all the information available at your fingertips if you were to get audited. And have a documented, repeatable process for manager exemption certificates. So as I mentioned, that's a hot button. The last thing you want to do is not be able to produce that document they're looking for, and that can be exponentially detrimental to you and could cause a negative finding in an audit. So that is all I have for you today. What I'm going to do is going to go ahead and pass it back over to Cheryl. Definitely, if you have any questions, feel free to send us a question. Contact your OmniVue rep or contact myself directly. We'd be happy to help you out. If you have any questions on sales and use tax, we're definitely available to help you. So thank you very much for your time today.
Mark, thank you very much. We really appreciate that, especially that last slide. It just gives us what to do's and not to do's, and very helpful all the way around. And it's our goal at OmniVue as well as Avalara to create amazing customer experiences. So I think that we've gone ahead and done that for folks today. I think our team is armed with some actionable information on how they can protect their company from negative audits. So we really appreciate that. And thank you to all our listeners today who joined us. The next slide that I'm going to present to you has all our contact information on it. Go ahead and capture that data so that you can reach out to us when you have questions about tax implications, or even as your company grows and your business needs arise, we'll be able to answer those for you. Microsoft works very closely with Avalara and OmniVue, so we'll be able to just pull it all together for you and make your business grow. Thanks again for your attendance today. We hope that you make it a great day. Bye-bye now.